What's going on, traders? What's going on, traders? Shocks here. Welcome back to the channel. Today we're going to talk about the safety trade. We're going to talk about the safety trade on the M15 time frame, the safety trade with a second leg element. So today we're going to be concentrating on the M15 time frame, dialing down on the entries, on the nitty-gritties of the entries, what you need to see on the M15 for you to enter. So we are going to be assuming you know your directional bias prior to going on to the M15. So directional bias, you can use your level counting, you can use your market structure studies. So if you don't know how to count levels, how to do market structure, please check out our videos on this channel so that you can know how to determine the direction of the market at any given point. So if you are new here, guys, before we go any further, consider subscribing to the channel, turn on your post notifications so that you don't miss any video from us. So today we're going to be talking about the safety trade, as I said. So before we go into the nitty-gritties of the strategy, guys, let's point something out before we go any further. You need the market maker EMAs, the EMA 13, the M15, the EMA 200. So those are the most important for this strategy. And you need to be able to identify a peak, so that's a double bottom, double top, M's and W's. You need to identify a breaking market structure. You need to identify the flip zones. You need to identify all those. So yes, let's get right into it. So this is a chart. So with this chart right here, we are assuming we are on the bullish uptrend. We are in a bullish uptrend on what? On the H4 time frame. So this is the M15, and we are trying to see how do we enter this market. What do we need for this strategy? What do we need to see on the chart before we decide to enter? So as you can see, guys, as you can see here, we're having a double bottom. We're having a double bottom. Then after this, so the double bottom is your peak formation. So you need to see a peak formation, then a sustained move from the peak formation, as you can see here. So this sustained move should break market structure, which means it should break the lower high. So after this sustained run, you will need to identify what? Breaking market structure. So a break of a lower high if we are in an uptrend like this. So the market broke this high, thereby confirming an uptrend with this market. So the confirmation of an uptrend is what you need before you enter. So we are using this as a strategy which comes after the direction has been confirmed, or after you have missed the first trade or the peak trade. Alright, guys, so number one, you need to see the peak. That's one. Number two, you need to see the 50 EMA crossing the 200 EMA. This is what we call the golden cross or the peak clock. So that's number two. Number three, you need to see what? Breaking market structure, which I showed you earlier. So this is the breaking market structure, which you need to see. After that, you need to see a retracement back to where? Back to the 200 EMA, or back to the point of breaking or to an order block. So this is what you need to see, guys, for you to use this strategy. So number one, we have a peak. That's number one. We have a cross, then a retracement back to the 200 EMA. The other thing you need to see on this strategy is an M formation or a W formation anchoring the 200 EMA on the 200 EMA. So what I mean is, if you are in an uptrend, you need to see the both legs of the W below the 200 EMA, as in this case. So let's look at another example. So this is a downtrend example. Number one, you are having your peak formation here, breaking market structure. That's good. Then cross 250. Have crossed. So after the 250 cross, you are looking for your trade the next day. So we are saying cross today, pips tomorrow, right? So the 50 and 200 have crossed. You are waiting for a pullback to the 200 EMA the next day. So the pullback here, as you can see, we are having both legs of the M above the 200 EMA. This is what you need to see for you to enter. So after you see both legs of the M formation above the 200 EMA, you need to see a close below the 13 EMA, which is the red EMA you see on my charts here. So after that, close below 13 EMA, that's your entry, and your stop loss will go above the what? The structure. So number 1, that's a peak formation. Number 2, cross. Number 3, a retracement back to what? To the 200 EMA. After what? After breaking market structure. Also retraced to what? An order block here on M15. So this is an added confirmation to the strategy. Order block plus the 200 EMA plus breaking market structure. This is what you need to see before you enter your trade. So this is added confirmation for you. If you don't know how order blocks work, please check out our video on order blocks on this channel also. So let's talk about the profit targeting on this strategy. You are targeting the next high or low on the what? On your chart. So you have entered your trade here after close below 13. You are targeting the next low you see, or the next equal lows, the next equal highs, depending on which direction you are going. If you are buying, you are targeting the next highs. If you are selling, you are targeting the next lows. So you are putting a stop loss above here, entry, and this is your first what? This is your first target. You can hold this for at least 2 days. Why? Because you are saying this is a level 2 trade. If it's a level 2 trade, we are saying we have moved only one level and there are 2 more levels to go. So if you enter this trade, you are anticipating the market to drop 2 more levels or to rise 2 more levels. So you can hold for 2 days, or you can enter it as a day trade, as an intraday trade, depending on what type of trader you are. Let's go to the next example. So this is example number 1. You are seeing you have a double bottom, a multi-day W pattern there. Then after that, you are seeing the 15-200 crossing. The next day, you are seeing a pullback to your what? To your 200 EMA, as you see here. And here we have what we call a breaking market structure after a sustained aggressive run of price from the peak formation. This is what you need to see. The breaking market structure should be very aggressive and should be a move you would like to be involved in. So after the pullback to the 200 EMA, you are saying both legs of the W pattern below the what? Below the 200 EMA and close above the 13 EMA. This is your entry. Your stop loss goes below the structure. You are targeting. This is your first take profit. Look at the move. Look at the move. This is the type of move you want to catch. This is the type of move you want to catch as a trader. Number 1, you know we are having what? H4 time frame being what? Being bearish. The H4 time frame is bearish, guys. The H4 time frame is bearish. Yeah, that's number 1. Number 2, you are having your what? Your peak formation. Or number 1, that's your peak formation high there. That's your peak formation high. Yeah. You're having your peak formation high. Then after that, you're having what? 5200 cross. That's your cross, the golden cross. Then you're having all these lows being broken. That's your breaking market structure, BMS. Look at the move which breaks those. This a very aggressive move. This is what you want to see. And the next day, you're having some kind of a head and shoulders pattern on the 200 EMA. That's what you're looking for. That's what you're looking for every day. And you're entering after a close below the 13 EMA. Stop loss goes above structure and you are cruising nicely. So the other thing, guys, if you miss this first trade, look, you're waiting for price to come back to what? To these demand zones right here. So you are waiting for breaking market structure, sustained run, then a retracement back to these demand zones, and you can be entering your trades right there, either by using a limit order or by market execution. So it depends on you. And this is your first one, your first take profit and breaking market structure. That's your flippy zone with what? With the 5200 cross. So guys, this is it. This is the strategy which you need to be practicing on. Go back to your charts, try to find this on your charts and back test before you go live. And guys, as you can see, we're using this strategy on volatility 75 index, and we've been testing on synthetic indices. So if you want to trade these synthetic indices, guys, they are available on the Deriv bro. Give it a shot, test it on demo, and go live with this strategy, guys. So this is it, guys. Don't forget to trade what you see.